Welcome to the Excess Guarded Fund of Fund Quarter 2 Fund Commentary. For the second quarter of 2019, the Excess Guarded Fund was up 0.9%, and year to date, the fund is up 5.8%. If we look at the underlying asset allocation within the funds, the Excess Guarded Fund has currently 23% in foreign exposure and an additional 10% in rand hedge stocks. Of that 23% in foreign exposure, 14% is in equities, 4% is in property, and 5% in fixed income. On the domestic side, we have 25% in domestic equities, 5% in property, and 48% in fixed income. The largest underlying shares within the portfolio are Naspers at 1.8%, Sasol at 1.2%, and British American Tobacco at 1.1%. In terms of the house view and asset allocation within the portfolio, no major changes have been made over the quarter, and the funds are still positioned overweight domestic equities, underweight global bonds, and otherwise neutral across all the other asset classes, mainly being foreign equities and domestic fixed income. If we go and look at changes that were made within the portfolio over the last quarter, there were two fund manager changes. First of all, on the foreign equity side, we introduced a new foreign equity fund manager called Ardevera, and they were implemented within the foreign equity holdings with a small weighting. We also made a change in terms of our global emerging markets manager, where we changed out of Coronation Global Emerging Markets and switched it into the Nedgroup Emerging Markets Fund managed by NS Partners, who are based in London. If we look at some of the performance of the underlying funds within the portfolio, on the money market stroke fixed income side, the Nedgroup Flexible Income Fund, which was up 2.1% for the quarter, performed nicely ahead of its peer groups and the STEFI that was up 1.6%. It's mainly on the equity side domestically that we have struggled over the last quarter, with our managers all underperforming the South African general equity category. So ABAX, who manage the Rainmaker Fund, were up 0.5%. Foot, managing the Value Fund, were up 0.4%. And Marzi, manager of the Marzi Equity Fund, was up 0.3%. So all three managers roughly up 0.5% and in positive territory, but underperforming the average general equity fund that was up 1.5% for the quarter. The small mid-cap equity fund, the Entrepreneur Fund managed by ABAX, was down 2.8% for the quarter, as well as was the property fund that was down 2.5%. The Prudential Passive Property Tracker, however, made up for this and was up strongly 3.2% for the quarter. On the offshore side, our underlying holdings have done quite nicely, with the Nedgroup Investments Global Equity Fund up 15% year to date and 1.6% for the quarter. Emerging markets have also made a strong recovery, and the Coronation Fund was up 23% year to date in rand terms and also up 1.6% for the quarter. Overall, the fund showed solid performance relative to the peer group and is still ahead of our inflation target year to date.